Hello traders, Gary Wagner here, just about 11:15 in Honolulu, 4:15 in New York on Monday, the 16th day of February, 2015, and this is the daily report for gold and silver. We do have markets closed now in honor of President's Day. They did trade overseas last night, and a condensed session this morning. Market currently trading in gold at $1230.49, puts it up roughly $3 on the day. The high today, $1235.60, the low $1229.90, and the market will open in approximately 2 hours from the time of this recording. We did enter a trade last night. We'll talk about that. First, let's take a look at silver. So silver is trading lower, although very, very nominally lower. Currently, you can see the print on the screen at 1728.90. The low today, 1725. The high, 1739. More on silver in a little bit. Traders, as the market is closed and will open up in approximately an hour and a half to resume trading from its break from President's Day, we did issue a trade recommendation yesterday as the market opened. We are looking at a daily chart right now. This is the continuous contract of COMEX Gold. For those taking trades, they're trading the April contract currently, and that's what this is actually charting. But traders who got in and took that call are in roughly at 1232, 1231, as high as 1232.5, depending on when you got in last night or early this morning. Now, the rationale behind taking this trade. This trade has been being set up for quite a few days. This, of course, on our daily chart, you can see that the last 3 days are green candles, meaning that they've had higher closes. We're coming in on a market that had a tremendous rally. This rally roughly at 1168. Up to this top at about 1308. Market began to come down. We looked at different levels of support, continually broke through the support level here. We broke through another one up here. And then finally, it seemed to find some sort of tentative support at around the 61% retracement level. That is right here. Now, as the market came down, we identified on Thursday of last week this particular candle type, which is simply called an inverted hammer. And an inverted hammer is a very small bodied candle with a tail that goes from on a green candle from the close to the high of the market, and it has to be at least 3 times the length in terms of the body size compared to the tail. We certainly met that criteria. To take that call, you've got to have a confirming candle. Your confirming candle is going to always be a green candle with a higher high and a higher low. However, because there wasn't a tremendous range, this being Friday's candle, and the fact that now this green candle is really a variation off of a Three River Morning Star, we wanted to wait for confirmation on that just to be a little bit safer. And we did get that yesterday. Although it's a small candle, we are getting a higher high, a higher low, a green candle off of the Three River Star. So we've got the inverted hammer and the Three River Star all occurring at a 61% retracement, which should be a good point for support. Our stops are just below these lows right here. And so we'll have to see how this trade pans out. But I can tell you that it's met all the criteria that we're looking for in terms of a setup itself within the marketplace. And as far as silver goes, and traders, I do apologize. Our daily chart is having a little bit of difficulty updating today. That's this gap right in here. But the market's currently trading around 1730. Our key level of support that we need to see it hold is approximately 1710. And in terms of resistance, I'm still pegging resistance up near this top here at around 80. This, of course, is a shortened edition of the gold forecast, being as the markets have closed early for President's Day. We will talk to you tomorrow for another daily update and review. Bye-bye.